Yo, what's going on? It's your boy Track Investing, and we are back here with another YouTube video where we're going to be talking about today the exact days and sessions to not be trading. I'm going to be going over those kind of concepts in this daily NQ review. As you can see, so far, price action today was absolutely garbage. But a lot of the times, right, you come into the day and you're like, I'm going to take a trade today. I want to take a trade today. I'm not really sure if this is a day where I should be trading, where this is a day I should not be trading. So I'm just going to go in and see what happens, right? Now, if you actually go back over the past 2 months, go back to each trade you've taken and analyze when did you take those losses. You'll notice that majority of those times were in a suboptimal environment for trading. And that is very real. It does have a very real effect statistically on your likelihood of probability. And so therefore, it is very critical that you identify the points in time and the times of day, as well as particular, trading conditions that would present themselves that would it would be more favorable for you to just literally close your charts and walk away if you don't have discipline to not execute and just tape watch. Okay. So without further ado, we're going to get into that. If you like what you're hearing so far, press that like button. That's what it's for. You're not paying for anything. This is just free advice on the internet. I'm just, posting, and I use this as my daily log because I love to speak about trading. And so that helps me to retain information. But one way you can compensate me for doing this is just pressing that like button. Press that subscribe button too, because some of you guys are watching my videos over and over again and you're not subscribed. So press that subscribe button, press that notification bell so you don't miss a single daily review. And I have leave a comment below if you have any questions. And lastly, I have a Discord that's free where you can ask me any questions below in the comment section or below in the description. So go ahead and check that out. Now, we always start off with a top-down analysis, right? So we could just talk about what happened today. We'll also go over the ICT 2022 model and see if there are any opportunities for that to enter today as well. But most importantly, I want to be talking about why we shouldn't have gone over, or why we shouldn't have traded at all today. So start off on the daily time frame, right? Actually, let's start off on the weekly just because we're starting off a new week. You can see the last week's candle. We wicked above the previous week's high and then ran lower and took out the previous week's low. That is a classic reversal profile, okay? And so you can see that we ended up taking out this liquidity here, here, and here. Now, longer term, I'd like to see this low getting taken out, right? That's something I like to see getting taken out, longer term. We could see ourselves return back to this weekly consequent encroachment of this wick, right? We could see ourselves come back up there and maybe drop lower. If we close above this wick, then maybe price could actually be having purged this liquidity and then it's running higher after coming back into this particular weekly order block over here, right? So this weekly order block, price may have just come back into that, right? We tapped it once over here and we ran higher over here. We tapped it and ran higher. We may be coming back here to run higher again if we can close above this constant encroachment. But for now, my bias on a weekly profile is that maybe longer term, we may be, even though we may see some short-term retracement higher, longer term, this is still boding bearish conditions for me. Now, what did I just tell you? Yeah, I told you that price could either go up and down, but there are conditions that are qualifying why price should do what it should do based on how it's interacting with these different PDRAs, which is why it's important to watch my daily videos, because then you'll know when to be shifting your bias bullish, when to be shifting it bearish. Another key thing is that we inverted this inversion for value gap, right, on this weekly BISI level. After multiple weeks of failing to get through the constant encroachment level, we finally rapidly took that out. And so that's another thing that also hints to me that we may be seeing bearish price action. We also took out the previous week low, so it's very unlikely that we could take out the previous week high. Most weeks you do not do that, right? And so let's go on the daily. On the daily, we have this really large, really large BISI that we just came back into, right? And so what I'm going to do is actually just color some lines around that so we can see how price is interacting with that throughout the day. Let's change to red. Make that line. It's not extended. Okay. And then let's get the consequent encroachment of that as well. We'll use that as we do the analysis today, top down. I like to make my constant encroachment dashes. Let's just make sure the coordinates on that are accurate. Okay. So what do we have here, right? So coming into today, right? We ended up taking out the previous day low, right? And we ended up taking out this low as well from the 27th of November last year. We ended up taking out that liquidity. We actually took out, I guess, the day before, which is Friday. But we ended up taking out this previous day low and then purged above this low, right? So we purged below this low, then we reverted higher, right, and closed above this low. And so typically, when that happens, right, when you see a wick like that, when you wick past a low, but you don't close below it, you actually close above it. Typically, the next candle could be pretty bullish, right? So this would be that 3-pin, right, low formation, right, where this next candle could likely be very bullish and fill this entire fair value gap. Now, what I want to be watching out for is if on this next candle, do we close above the constant encroachment of this and the full daily SIBI and turning it into an inversion for value gap? At that point, we could rise higher and come and tap this daily SIBI over here. This daily SIBI over here at that point. And that would get us back to, let's see what the equilibrium level as well is from this high to this low. Yeah. So this is equilibrium on the daily. That is a PD array I want to keep as well on my charts. And remember, I told you what we're going to talk about today, but just bear with me. We need to be doing the higher time frame analysis, okay? We're going to get to, on a smaller time frame, how you could have noticed that today was just not a day to trade. Now, price ended up, wicking lower, closing back higher, and now it's come back into this daily FVG. So after purging this low, right, and you're seeing price starting to reverse, this daily SIBI right here should be your easy next draw on liquidity, right, on lower time frame. So on the 1 minute, if you're looking to take any longs, it should be looking to take any trades on 1 minute, you should only be taking longs heading for this daily SIBI, okay? Now, like I mentioned, if we overlap this SIBI, we could reach back to equilibrium and run lower, or we can reach all the way back up to this daily SIBI, FVG in a major premium, and then run lower, right? That would be my bias to end up taking out the, completely closing in this daily BISI gap right below this low, which is called order pairing, right? Because you have a key low and you have a daily FVG that has not been completely filled below there. So this is a pretty sensitive level that price could be drawing towards, depending on how we interact with this daily SIBI. And then also this daily BISI right here as well. And so those are a couple key levels that I'd like to see. The reason why I'm bearish, right? We also entered into a seasonal shift, right? So every quarter there's typically a shift in price action. So heading into January, right? Price has now broken market structure below this low, created a SIBI in the way of that, returned back to this bullish order block, ran lower and made a new low below this low, came back higher to this daily SIBI and ran lower, made a new low below this, low, right? And so typically my next, based on bearish market structure, right? This is bearish market structure, right? This is the market maker sell model. Now I'm looking to see price run higher to a premium to sell off, right? And we're in the beginning of the week, right? This is the power 3 concept. In the beginning of the week, it's likely that we rise higher so that later in the week, we end up running lower, right? So just think about this as the Judas swing earlier in the week, okay? And so that's just a couple things to keep in mind here that I'd like to see. Going into the 4-hour here, not spend too much time. I want to get past this pretty quickly. So you can see here at, but overnight, right, we had already moved a lot and taken out a couple lows, right? So we took out this low and this low over here already by Monday's London session, right? Let's see how large that move is. From here to here, about 222 points. That is the first sign that you should not have traded today, right? This is not a trading day, especially in the morning. That'll tell you typically, first of all, this is in the morning session, you should not be trading. Now, there's another reason why you shouldn't be trading in the PM. We're gonna get there. But, but typically when you see a large move overnight like that, you do not want to trade AM. You want to focus on the PM. But let's also take a look at what today's news calendar look like, right? No news, basically no news for USD, right? And so typically on Mondays, when there are no news, the PM session is always garbage. Always garbage. Okay? Always. Quote me on this. Literally 100% of the time. In fact, even when there is news, Monday's PM session is typically very trash. I avoid trading Monday PM session whenever I can, right? And so that's why, overnight movement, if you had a large overnight movement that's 200 points like that, right? Anything above like 100 points, 150 points, like, right? The AM session is off limits. But then after that, because it's a Monday with no news, you definitely do not want to be trading the PM session either. And so that's why today, that's one of the few reasons why today you should not be trading. Okay. So you also hit, right, these two lows by the time it was AM session and started, and obviously didn't show a willingness to run lower, right? You just continue to, you basically just reverted. And so it's telling you we've already done what we needed to do pretty much overnight. AM session and PM is just going to be, oh, hey, we're done, right? And so after taking out this low, instead of us to come down here and take out this liquidity, why didn't we do that? It's because of that daily SIBI above, which actually did not translate into lower time frames. Let me make sure I have that here. Visibility. Right. So the reason why we didn't do that is because let's just go back to the daily time frame. You took out this low, right? What is this low called? External range liquidity, right? After you purge external range liquidity, what do I say on this channel? You're likely to draw back into internal range liquidity, right? And so when I'm seeing that price is all the way low here, but then it's breaking market structure on lower time frames and continuing to run higher, then that tells me that we are likely to return back to this FVG before we want to head any lower, if that is the case, or we may not even touch any of these lows, and we may just be rejecting maybe from this rejection block candle right here and running higher to go finally maybe touch this SIBI or even break market structure and go higher for the year, which I think is unlikely. I think they were likely to fall, right? Thinking about macro concepts right now, which definitely would help you inform, why you could have a certain bias as well. Macro wise, we are seeing an environment where people are pulling back from the idea of rates falling. And so that can be very bearish for equities. And so I'm thinking that long run, we may be seeing some pretty good correction on this move that we saw happening in the last quarter of last year, right? We could see price correcting a little bit. And so that's why I have a very bearish, mindset going forward. But right now we are in a short-term retracement, or at least what I believe to be a short-term retracement. Okay. And so that's why on the 4-hour, we end up running higher and we come back to this, this FVG SIBI. Okay. And we also return back to this 4-hour SIBI as well. So let's just keep that on our chart to see how that gets interacted with on a lower time frame. Okay. Also, you can see by the end of the 10 a.m. candle for the 4-hour, which ends at 2 p.m., right? We overlap this 4-hour SIBI completely, which should tell you that for the rest of the PM session, if you are going to trade it, right, that you're bullish, right? And then we're heading for this SIBI right here. And ultimately, you have this daily FVG, which is taking the most precedence, right? If the price is running higher like this, you're probably going to see these lower time frame FVGs inverted because there's a higher time frame draw on liquidity. Why? Because higher time frames trump lower time frames. Okay. Make sure you type that down below, right? This is where you take notes, right? Higher time frame trumps lower time frame in the comments. Okay, it'll help you when you're taking notes, right? Now, on the 1-hour, you can see ever since the new day opening, the new week opening got formed overnight, we just kept running lower, right? Very large move overnight. All right, that's almost 343 points. Definitely do not be trading the AM session. And then this is London's low, right, at 4 a.m. We do not show a willingness to take that out, right? And instead, we are reacting off of this wick right here. Right? We're reacting off of this wick. So this wick acts like a fair value gap, right? So you can see that we're closing, we're tapping the wick, running, tapping it again, running higher, tapping it and closing in the upper half of this wick. It's telling you that that's really bullish price action, right? That we're either showing a resistance coming lower or it is a bullish price action. When you see price create a bullish order block like this and then it inverts, right, this 1-hour FVG SIBI, it's telling you that price is really going to be bullish for the PM. And that's why you want to be patient and wait for what the higher time frame is likely telling you, right? And wait for your overall bias. And you need to do a top-down analysis because it'll inform you where the 1 minute, 5 minute, 15 minutes likely to go. And you won't be surprised when you see certain moves happening, right? There's a little bit of SMT here. We'll talk about that on the 15 minute. But you can see that we struggled to get through this 1 hour FVG, right? Post London session, we came back into it 6 a.m. And then, oh, sorry, I was on the 2 hour this whole time. But same concept still applies for the 1 hour, right? So you can see time is fractal, and these concepts still apply. But you can see that coming into 7 a.m., 8 a.m., 9 a.m., 10 a.m., right? Throughout these times, pre-market, we were just bouncing back and forth between this 1 hour FVG SIBI, right, and this wick below here, this wick right here. You see price returns back to it multiple times, going back and forth. Why is it choppy like this? Because we moved a lot overnight. So price is definitely in a high resistance, bouncing between these two PD rays, which makes it even worse, right? And finally, by 11 a.m., going into the lunch hour, we start to revert on all this move, right? Because lunch hour can typically be the time where price will run against, where the general order flow has been all day. You can typically see a reversal happen like that, especially if we didn't move a lot over, during the AM session. You can see that the move can start around the lunch hour, right? And so price moves higher, creates a 1 hour BISI FVG, returns back to it at 2 p.m., and then creates the high, creates a high here going into the last hour of the trading day. Returning back to this 4 hour SIBI and tapping this new week opening gap or just coming shy of it. And then eventually overnight, we're heading into that daily SIBI. Now on the 15-minute, moves overnight. You can see that once we get into basically like 9:30, price action starts to fall off. Price action really fell off pretty much after the London session. So even pre-market, right? You moved a lot in London. Pre-market is trash. 9:30 open, trash, right? But overall, right, we start to see a real move to head higher, right? Well, actually, let's go over something real quick. One, I would have liked to see this London low take out, but that didn't happen because we had SMT right here, right, tapping this 1 hour wick at 9:30 at that Judas swing, right, taking out this low, and there's SMT that formed with ES, right. So at that same time, you can see that ES did not take out this low at 7 a.m., but NQ took it out. So you can see that that was followed by bullish price action. So if you had to do anything, you should kind of been looking for longs, right? Especially the overall context of the market. Now, we have this 1 hour FVG that's above here, right? Plus this 4 hour SIBI as well. And price is running back and forth. Very characteristic of a morning where we're anticipating to be choppy and you're in between two PD arrays. We are now, creating this 15-minute bullish order block at 10:30, but you can see that the next candle after this very strong candle did not expand. Instead, it wicked higher, tapping this bearish order block here in the 15-minute and then running lower. And what do I talk about on this channel, right? Like if you see a candle like this, you want to see the next to be truly bullish, right? To start looking for longs, you need to see the next candle close and be higher as well, right? The fact that we went higher and then wicked lower and it came back tells you that price is not ready to run higher yet, right? And so price makes this pair of relatively equal lows, and then finally starts that real move post 12 o'clock, heads higher, creates propellant bullish order block right here, right? Which is just a bullish order block like this plus another one, right? So this wick area tends to be very sensitive. So you can see that we're closing on this wick area right here, right? And then price continues to make more bullish order flow. And why is that? Well, one, let's make sure that we keep that 1 hour BISI that formed as well. Remember, we had that 15-minute SMT, and we have that daily SIBI as a particular draw on liquidity. So we are now entering bullish order flow because we have a draw on liquidity. It's being supported by 15-minute price action and 1 hour price action, right? And we end up getting there, right? And so think about market maker buy models, right? You need to wait for the higher time frame to have the draw on liquidity, right? So the daily, the 4 hour, where is price going there? Then you need to, in order to get into a trade, you need to see the 1 hour and the 15-minute supporting that with market structure, right? We see bullish 1 hour market structure. We're seeing 15-minute bullish market structure. And then what you do is you wait on the 1 minute or the 5 minute for price to pull back into those key discount arrays to form your order entry or your entry model to head higher, okay? And so, going to 2 p.m., you run low into this bullish order block. Plus, that was inside this 1 hour SIBI, and at the top of this 4 hour SIBI right here as well. Price runs higher and ends up returning back to that daily SIBI at some point. On the 5 minute, very trash price action. Not much to go over. That was very different from the 15-minute. Only thing I could say is that here going into 12 o'clock, this is where you see the first 22 model of the day. Now, this is where I'll talk to you about my entry model, right? So 22 model looks like this, right? So you have this high that forms, and then you purge this recent low, right? Price runs higher, breaking market structure above this high, right? Fair value gap, and then returns back to it, runs higher, right? And so let's say price, was making a series of recent lows. You hit a key PD array right here after purging this low. You break market structure above this high, return back fair value gap, and run higher. And that's the ICT 22 model, still very relevant in 2025. It is the easiest trading model that ICT said he would teach his daughter. That's how easy it is. So let's look at that right here. So, we don't want to trade in this session, right? So now we know that post 11 o'clock, which kicks off the lunch session, right? Typically around 11:30 is what kicks off that lunch session, that you can start to see good price action. So you can see that, we're racking up this wick. We're obviously not showing a willingness to go back below this London low. We have this SMT here, right? We have that daily SIBI that is a drawn liquidity, and the price on the daily candle is starting to look like it's going to purge and revert higher, right? And so going into the lunch hour, especially after all day has been very bearish, this could have been the only valid trade that if you had a gun to your head, this is the only time you would take this trade. Right? So low, high, lower low, breaking market structure higher here. Price returns back to this fair value gap, right? And then runs higher. Now you can see how trash this PM session is. It's not until about 3:50, the last 10 minutes of the day, that we had a real move higher, which is why I do not like to trade the PM session on Mondays. Like, look at this. Like, you shouldn't be entering on anything in something that looks this trash. But let's say you have the guts to hold on to price action, then you can hold that and wait for maybe the last 10 minutes of the day to make a move. But typically, I do not want to be waiting in 3 hours of trash, right? I'd rather just wait for better conditions. But then if you have to take something, you could have done that, right? So where would your entry been, right? Entry could have been this fair value gap that is also in line with this breaker candle. Your stop loss is here, below this breaker. And then you can aim for these relatively equal highs above here, taking your first partial here, right? And then maybe another partial, like when you get to this 4-hour SIBI. And then ultimately, if you could hold overnight, you'd wait until we get back to that daily SIBI above here, right? So this would be a 1 to 3.54. Okay. I think that makes sense. We did have the short-term pullback, taking out these LRRs. And what time did that happen? At 2 o'clock, right? And so this is the 1 to 130 time cycle low that gets taken out heading into the 2 to 230 time cycle, right? And price runs higher, keeps going, right? And then taking out the 1:30 to 2 p.m. Time cycle high here, it runs lower, and then it's higher, right? Let's go in the 1 minute. See if there's anything interesting here. Bunch of trash, right? Right from the 9:30 opening. We did have this low here that formed SMT with ES. Once we took out these lows here, came back into this wick, formed SMT with ES below this low. Breaker market structure higher, really large gap that was formed. Price runs into that, basically stays in the upper half of the gap, runs higher, ends up taking out this high over here, I believe. And actually creates relatively equal highs. Runs lower, comes back to this fair value gap, and ends up returning back to 4-hour SIBI. Now, gun to your head, that could have been a valid trade just because of the 15-minute SMT, the reaction from the 1-hour wick. But, my overall bias would have been still bearish. I wanted to see this London low get taken out. Because we didn't take out this London low, and ES also did not take out that London low as well over here. Like, I wouldn't have wanted to take that, right? Because that London low could definitely still got taken out. Plus, very trash conditions, right? You do see a 22 model here with this high, low, higher high, run lower, return back to the SIBI, and runs lower, but comes back to this wick. Right, at this point, when I saw SMT here and price breaking higher, I don't want to be looking for bearish price action anymore. Even if I'm looking to see these London lows getting taken out, maybe on a regular day I could have taken this. Maybe on a regular day, but because I'm expecting this to be a trash AM session, I need everything to be aligned and very obvious, right? And it's not aligned and obvious at this point. The only time is, remember you could see another 22 model was this 5-minute one right here, right? So you can see basically in the AM session, price is just gyrating back and forth very uncleanly, not really going anywhere. And it's not until, you have this move after 11:30 running against these relatively equal lows, right? And then heading into the 12 p.m. lunch hour, that price starts to really make the move for the day. And that lunch hour definitely has that move, but then the PM session, pretty trash, garbage. And not until about 3:50, where price kicks off that last 10 minutes of the day macro, right? Makes a large, like, look, it happens right at 3:50. So it's not a coincidence, right? This is an actual macro that takes place where price runs higher, comes back at that fair value gap with institutional order flow entry drill, and runs higher into this 4-hour CIVI. So that is today's log. Hopefully you learned something today in the ramble that just went on. Press that like button if you liked anything that we talked about today. Press that subscribe bell. Press the subscribe button. Make sure you press the notification bell, and leave a comment below if you have any questions along the way. Join the free Discord, and I'll see you guys in the next video.